What up, guys? It's Nick. Been a while since I've been on YouTube. Crazy busy lately, just with life, with traveling over the weekend for Memorial Day, and some mishaps with the car. Finally getting settled in, kind of getting everything in check, reanalyzing, reapproaching, just kind of looking at things and explaining more of like my zone of strength and where I kind of got that 6'1" to 6'7" mark from. So before I get into it, I am a licensed professional in the industry. I'm not a licensed financial advisor. Just have some experience within the industry in the past as a broker. So just take what I say with a grain of salt. I never want to kind of sway someone's investment choices, as your risk profile is different than everyone else, including myself. So this is all just opinion based on experience in the market, understanding dynamics and how stock movements operate, especially with this crazy kind of situation we're currently in. So kind of start with the macro, get into what I'm seeing here, and then work our way down into the micro and what to expect for the next coming days. So something I noticed today was that they love to basically stomp us out in key technical indicators or in key technical zones. So I'll get into it on the micro, but essentially what happens was we already got our confirmation on the ESD crossover of the 50 EMA to the upside on the 4 hour. So like I mentioned before, that's only happened on the 34 run, the June run, and the January run. That's the only 3 times we've gotten that before. But we got that confirmation on Friday. We're still well above it today, even after all that BS that they decided to pull. SEC comments, their little stupid video. I mean, you got banks, you got Goldman Sachs, whatever you want to refer them as, piping out saying the movement's over. Like, it almost makes you sit back and think, like, how close are we really to like tilting these scales to like believe that the SEC is going out of their way to make a video bashing quote unquote meme stock traders, aka 90% of your retail investors, in regards to other securities affected by this nonsense going on right now. It's just funny. It just kind of shows the true colors of the SEC, kind of the country in a whole, and just what they've been getting away with for so long. So just kind of wanted to highlight on that, and then kind of get into just what I'm seeing here. So obviously, yeah, today was day one of my zone of strength, but like, am I deterred by these stupid comments from people saying, oh, you're always wrong, XYZ? It's like, dude, it's a zone for a reason. It's not going to be perfect. Like, there's certain things that have to take place to allow for continuation. And when you got the SPY dipping almost 2% at one point, I think it's like 1.5%, and then coming back to almost being green and then closing down like 0.5%, like, I'm sorry, but if my TA is not spot on, or if we had a downtrend the whole day while the inflow is greater than the outflow, almost 2x, the call put ratio was 3x, I believe, meaning 3x more calls than puts were bought today. The 35s out to this Friday have over $250 million in premium on them. There's a lot of catalysts coming up. So before you want to hate, give me the rest of my days in my zone of strength, and I think you're going to be very well surprised on what's to come here shortly. So rather than getting off on that tangent for too long, I just wanted to get into here and kind of explain some things that I mentioned on the last run-up. You don't necessarily notice it too drastically on the daily, but you can still see like your micro or macro events here. So like every strong breakout, meaning like our 1350 down here up to the $21 mark almost, like that's a pretty significant breakout. Every single breakout, you come back and retest your breakout point to kind of confirm the strength of it in this particular scenario because of the mass amount of suppression on the upside or on the downside. So breakout, retest, breakout, a slight retest, full retest, but you're also fighting this macro downtrend. So there is other factors that can come into play here. Breakout, retest, tried to get back into the macro downtrend. Market was shite from, gosh, arguably end of January until now. So other events there, but came back, retested your old breakout all the way down here, shot up. Where are we at here? Tested some of these lines, retraced, tested, came back down, big test, strong pullback. People thought we were done, and kind of bounced around, and then we got our nasty breakout above the macro. And then, yeah, I mean, everyone knows what happened here. Obviously, this would have kind of been your breakout point. I was honestly saying we were going to flip back here and kind of bounce off of this. But of course, if you look at SPY or broad market dynamics, like they're flushing the whole market here. And here's our second attempt where I also thought we were going to break out and kind of continue. And then your third attempt. So like all of these are justified as regions for potential continuation depending on the strength. So like we fully should have broke back out of here and continued this run. But they stretched the tape very dramatically. Kind of what led here. Massive downtrend once they broke this macro. Folded here. Flipped back up. So a movement off of 970 up to 1422, I think it was. Got the retest. The strength and the demand was there, so it continued up. Retested, came down. Friday broke through, all the way through, tested the 50 EMA outside the macro wedge. And what are we doing here? I didn't think we'd get the full retest, obviously, but like the fact that we did today doesn't have me overly concerned in regards to dynamics there, because all it's really doing is just kind of what it's been doing every time. It's just back testing its breakout point, and its breakout point was like that 1290 to 1320 range that I highlighted on Friday, and sure enough we smacked right through that. So what I'm looking for going forward is we'll get into a little bit more on the micro side of things. This wedge can sometimes change when I change time frames, so if I need to adjust I'll explain, but just know the outside of this macro wedge here is roughly, let me just get a better point here. When we basically touched it, it's probably 1275-ish, 1260 range, which is what we were touching today. So that's kind of what I'm looking at for a strong bottom tomorrow, if it does want to slip us out the open. But there's going to be a couple of scenarios, because tomorrow is very big in regards to just sentiment, movement. Like I'm really looking for just a positive day, both broad market and also within AMC, because if we just get back over this 1320 hump, we'll get into it here shortly, we're going to start really moving once we're over our zero gamma line of 13, which is currently what it's sitting at for the month of June. So zero gamma line basically is gamma tracks the rate of change within delta on the options, Greeks. So rate of change within delta, basically saying once it flips over this tipping point within the scale, your delta is going to go up. So what the market makers have to do, they are the ones short the calls because you bought them from them. What they have to do is they have to delta hedge their short call position by buying and accumulating more shares to offset their risk in regards to kind of holding or balancing their book. So when everyone says a gamma ramp, it's basically gamma is going up, meaning the volatility of delta is also going up. And because of that, once you kind of reach over that tipping scale of 13, that's kind of when their risk profile adjusts. They have to start delta hedging for the 13. And that's basically what I view as a true max pain within a lot of these movements. So I'll kind of break it down a little bit further in regards to the micro, what I'm seeing going forward, and what we should be expecting. Because like what Rico was saying today, anything he said on his YouTube last night, like it's all 100% accurate. Like you throw a stock on here that's not this manipulated to this degree, you're gonna see the exact same thing. So like that's a whole subject in itself, but the people that disregard or like discredit technical analysis because it doesn't play out perfect just kind of make me laugh. Like you're quick to point a finger, but you're even quicker to not provide input that could actually be valuable, because no matter what I draw, I'm not controlling the price. That's not the goal here. It's trying to forecast and increase probabilities. So whole tangent in itself, but just kind of wanted to highlight that. I've seen a lot of it recently. I'm used to it. I can handle it. I'm from the desk. Happens all the time. But just kind of give some perspective to those that say it blindly without thinking about what they're saying first. But here's your daily, kind of more zoomed in here. So any movement up above the standard deviation line, you'll see that's kind of where we catch our nice pops here. So broke it here, popped up, macro trend, and came back above, kind of broke above, but we had a strong macro trend keeping us, or trying to pull us under on this low volume here. But then we broke out above it. We had a strong break this time, the day following the break here. Strong day on the breakout to get over the standard deviation line here, and it kind of continued. So this is basically what was starting back here on this big macro break here on Friday. What we did though, and this isn't abnormal to see considering the circumstances, is we went up and tested the 50 EMA on the daily candles, broke through it, pierced the top band of the ESDs, and then damn near touched our pivot point here at 1640. And of course, once they were able to break this downtrend, obviously we got a nasty little red day with the SPY sell-off and everything else there. But if you notice, we actually caught right on the standard deviation line on the daily. So that's extremely encouraging, because usually that shows the continuation of the reversal, or indicates a reversal's inbound. So what I'm looking for here is what they might try to do off the open is potentially slip us down to this macro wedge to get the full retest. I don't think it's needed by any means, but that'd be around 1250, 1240-ish range. Is a possibility off the open tomorrow. Again, I'm not forecasting that, but I just like to give people perspective there in regards to it. And then when we kind of get more into the micro viewpoint here, there's a couple of things I wanted to point out. I'm just trying to pull them up on my side here. It's very important to highlight. So just zoom in here. And then throw on some OBV, because what's extremely funny to me is that these banks are saying that the meme stock rally is over. Majority of retail sold their shares, XYZ. Like, it's just so comical, because if you look into kind of what true on-balance volume is, indicating like current holders within the security, like, you'll notice how how far they're going basically to lie about their little narrative that they have, because they've been saying this recently. SEC dropped that video, and then Goldman Sachs basically came out saying that it's over. Well, if you look into, let me get this pulled up on my side here. If you look at the net premiums versus stock for AMC within this period of time, let me see if I can pull this up over here. I'm going to have to clip this. If you look at net premiums versus the AMC stock price, it kind of shows you like your option flow for the last 5 days. So this is under trade analytics. I use them for a lot of my forecasting, or just like option flow, because I'd rather know the directional sentiment versus big buyers or sellers, because that's not necessarily true flow to me. So if you look into this here, I'm just trying to get it pulled up on my side. It shows that the net flow from calls has only rose in the last 5 days since our breakout down here. And what's hilarious to me is that people are saying that they're selling, or that the movement's over, we're going back to $9, or that, like, essentially we're dumb for following this and it's not going to happen until late fall. I strongly disagree with that one. So basically, here's a better image there, is if you put this up on this side over here, this gives you your net premiums for the last 5 sessions, which is green are your calls, red are your puts, and then white is your stock price. So obviously you see the call volume has been pretty extreme lately. This has been something I'm hitting on a lot as of late. Your call volume is basically somewhat mirroring OBV. Obviously it's not going to be the exact same because this is showing like kind of basically someone front running their calls and dumping them as the breakout's going or during it, because it is slightly lagged on the stock price. So what's encouraging to me is puts have, from a trend wise, gone down. Calls from a trend wise have gone up throughout this whole entire thing, and OBV has only climbed. Like, sure, it's dipped down here on the immediate sell-off, but then you notice it rises back above, comes, and then flattens out here. We're still holding this general trend up here while the stock shows a dramatic sell-off, when in reality we're basically where we're at on this support here on the OBV side of things. So no one's actually truly selling, which is what I'm really trying to highlight here, as the rest of mainstream media tries to paint something differently. So if you get into it a little bit more technically, what I'm looking for tomorrow is, these are very similar trend lines. I mean, they're the same trend lines that I have on the macro. This is just more zoomed in to where it makes a lot more sense on some of this. What I could see them doing tomorrow is, obviously they're going to try and retest this macro trend, if I had to guess, and keep us below the standard deviation line, because that's what they wanted to prevent here. Is if we would have completed this crossover, we would have continued running like I expected, but of course they knifed it off, broke through that, and this is an important crossover to the downside to kind of notate but not necessarily be scared of, just because of our current positioning. But this is the 1 hour ESD crossover, the 50 EMA to the downside. So typically this would forecast like bearish sentiment. The reason why I'm not stressing out about it is because the 4 hour still has plenty of room before that cross takes place, and that's kind of the big one that truly dictates or confirms the movement for me. So with where we're sitting here, I want to wait and see kind of, one, how hard the bounce is off this macro if they do bring it down here, because this could be kind of our true spring in these zones down here. And then two, this could easily flip back up with it and cross right back through the 50 EMA. So sentiment can change within 24 to 48 hours or 2 market sessions. So everyone that says I'm wrong, great zone of strength, like, politely go have a great day and learn something new, because I'm not wrong, and I'm not taking any L's. I'll own it today for not doing exactly what I expected it to do, but data changes, and I just kind of wanted to highlight on that. You got 3 hours of doji candles. But yeah, June 2nd, you got your GME dividend announcement and kind of some more details on that. I think that's going to be massive. I'm just ready to show Wall Street, show mainstream media, show everyone that continues to doubt this movement that, like, one, we're not leaving, and two, there's a lot more strength and corruption and mischief that's going on behind this on both sides, from the whales who are trying to show something along with retail, and also the ones running the system in itself. So it's going to be fun. It's going to be soon. Their books can't continue to handle this, especially with quantitative tightening, collateral kind of requirements, and positioning on the options chain in regards to delta increasing. So they're prepping for something big, as am I. Take this how you want. It's currently what I'm seeing. Looking for positive day tomorrow. Above a 13 close would be phenomenal, because that puts pressure on that 0 gamma line. But I fully expect we could retest this 1320 and kind of give a battle of the 50 EMA here. So I'm looking for like a high volume consolidation day or accumulation day up above the 13 zone, preferably above 1320 if we can get it. If we break 1320 and the 50 EMA, we can easily expect to test at that 14 level again, which is a big one that they don't want us over. They don't want us over 13. So I'll post some more scenarios in the morning and kind of give live market updates. I got a full day open tomorrow, so I can kind of be within the Discord. I'll leave a link in the bio here. Drop a like, comment if you'd like as well. Rico's Discord has been nothing but helpful for literally everyone in there that I've encountered. So great group of guys just looking to help each other, kind of expand their market knowledge outside of just the memes. So check it out. Appreciate you watching, and we'll catch you tomorrow. Have a good one.